creating a budget for home service businesses.
You do not need to take an accounting class. In fact, I highly recommend you don't.
I wasn't worrying, do I have money or not? I was just trying to understand what happened to it.
Not every revenue dollar is something for us as the owner.
You say math and they're like, I'm out of there. I'm going away.
Don't buy into it if you're listening to this. You don't have to spend a lot of money in marketing to make a lot of money.
And you might be thinking, why am I mentioning this on a business podcast? I promise there's a reason.
We don't deserve to make a good living. If you don't read the book and you don't want to do anything else, here's what you do.
Welcome back to the Balanced Business Podcast. This is the intersection of business, health, and life. Today, I'm going to be interviewing Meaghan Likes. Meaghan is a business friend of mine in the home service world, and she runs Likes Accounting, as well as, I believe, 7 other businesses now. And she works with business owners to simplify their accounting and to make their bookkeeping pristine. So Meaghan is going to be working with me today and talking with you about creating a budget for home service businesses like ours. And we're going to walk through Meaghan's simple budgeting process and how we can integrate popular methods like Profit First into our own bookkeeping so that we can have control over our books and we can ultimately bring a little bit more money home at the end of the day and take some of the stress out of the finances that maybe a lot of us experience. So Meaghan, welcome to the Balanced Business Podcast, and thank you so much for joining us.
Thank you for having me. I'm really excited about this. And thanks for that generous introduction. And for those listeners out there, I also own a cleaning company. So I feel like sometimes the pains that we're experiencing in that cleaning world or in home service in general, it makes my tips a little bit more practical because a lot of the lessons we're going to go over today are ones that I learned at home with my husband, Jeff, who was not good at money, but was really good at cleaning windows. So I'm excited to share what we've learned and hopefully help you all as you navigate your 2024 finances and into the future.
I'm afraid to start the podcast off with a terrible pun, but there's something around clean books and cleaning businesses there that I probably shouldn't mention. So I'll leave it.
Yeah, we'll just leave it right there.
I'll leave that in the jokes graveyard. As a first question, Meaghan, to start this off, I want to see if we can start maybe from perhaps a high level and then start to break it down to a more step-by-step process. So I was thinking maybe a good place for us to start could be, let's say we have a friend of yours runs a cleaning company and they're coming to you and they're just very confused and everything's a little chaotic with their books. They don't really have a framework to work through their books with. And because of that, they don't really know how to get control of them. If this friend were to come to you and were to ask you, hey, what's a high level approach that I could use? And what are some of the key elements that I might want to consider when I start budgeting to get things under control? What would that high-level framework look like for you if they had to build that budget from scratch?
Yeah, I feel like people use a lot of words interchangeably, like books or goals or budgets. And it gets a little confusing, or numbers. And we have all of these I'm going to call them experts, or we could call them gurus who are saying, you need to know your numbers. You need to have a budget. And you're like, but I'm just trying to have money at the end of the week that I can feed my family with. I think that's really ultimately what we're talking about here. So when I have somebody that comes to me and they're like, I am really struggling, I say, okay, let's take a deep breath and let's start with what we know. So what do we know right now? And most of the time, even if you don't have a set of books, which I encourage you to, most of us have some sort of data about the financial health of our company. And that's what I really am passionate about, is talking about the financial health of our company. So that could be as simple as having a CRM. It could be as simple as having a calendar with a schedule. But the idea is we need to know, first number that every business owner should truly understand is the revenue coming into their home service company. How much money is coming in? It's fun because it's the number we like to brag about the most, right? Especially in housekeeping, I hear so often our run rate is, people are very proud of our run rate. But the reality is it's really hard to spend run rate. So I usually, when I have a cleaning business owner that tells me about the run rate, I'm like, that's fantastic. But what did you do last week? And then they kind of get weird headlights, oh, I don't think about it like that, okay, well, how about this? What did you do last month? And they're like, what did you do last year? Oh, let me go find my tax return. I think I know that. So run rate is it's a great metric. It's a leading metric, but it doesn't actually help us budget. We can't budget run rate because it's kind of imaginary. So I think first number is revenue, like getting a true handle and grasp on how much money is coming into the business is where I would start. My favorite place to check that number is your bank account, right? Like how many deposits came into your bank account last month? And this is a trap in case you're listening to this and you did not notice that this was a trap. The trap is we need a separate business bank account.
So important.
It should not be going into our personal bank account. It should not be going into our family bank account. Should not be going into like another side hustle's bank account. Like you need a separate bank account, at least one, to put your business funds into so that it's easy for you to see and easy for you to do books. So bookkeeping is really just the record of inflows and outflows. That's all bookkeeping is. So if it's all muddied in a joint bank account or in a personal bank account, then you can't actually see anything. If you're listening to like, Meaghan, this is too basic, don't worry. We're gonna get to the good stuff. But for those of you that are first starting out or maybe have a few bad habits, this is your reminder. You're gonna separate personal from business, and we need to get a really good grasp on how much money we're actually bringing into the company.
That was a really good introduction. And to make this even simpler, one thing that I used to do when I was trying to get control of my business was just to understand like what happened. So I would ask myself, what happened to that money? I wasn't worrying, do I have money or not? I was just trying to understand like what happened to it. Like I would go to my reports. At the time I was using a software called Launch 27. And most of the booking softwares or other CRMs that you use, they'll have a reports page which will tell you how much money is coming in. So you don't have to manually track every number. You have some of that already at your fingertips. But one of the things I used to do is I'd go, okay, $20,000 of revenue came in this month from cleans that we did, but there's not $20,000 in my business bank account. Like, so what happened to that? There's $2,000 in my business bank account. What precisely happened to the $18,000? And so instead of trying to understand like 50 different technical terms, I just tried to understand and kept asking myself, what happened to this money? And then what happened to this money? And then what happened to this money? And as a first step, as a non-bookkeeper, I'm curious what you think of that. When you work with small business owners and you start to see their eyes glaze over as you mention things like run rate or, adjusted gross income, and you've lost them 10 seconds into the conversation. What is a way that you can get typically a business owner to take that first step? You get them to look at their revenue number. Okay, they found their revenue number. What do you do with that next with them?
Well, I want to stay where you were just now because I love that what happened. I think a lot of us don't know our numbers, or we don't do our bookkeeping, or we don't understand our financials because we're telling ourselves a story that we're not good at math, or we're not smart enough, or it's too complicated. I spent the first 5 years in this space, telling people, you need to do your own bookkeeping. You should not be delegating your bookkeeping. And everybody's like, no, I don't want to do it. Run away. And I'm like, the only reason I say that is because of what Chris just said is I want you to be curious about it. You're the one that can actually impact change. You're the one that cares about your money. So how do I get you to understand your money? That's all Chris is saying is what happened is just being very curious, non-judgmental. And I love how you said, we're not asking where did it go? We're not asking why isn't there any left? We're not asking why are we overspending? That's not the language we're using. We're just saying, I wonder what happened with the money last month. And we're curious. And we kind of take on that private detective. I picture myself with a little magnifying glass looking at my expenses I'm going to go trace where all this money ended up. And so if we can raise our awareness, step one, the natural thing that happens next is we're more conscious of it. So once you're kind of aware of where your money's been going, then we start paying attention to it. Fun fact about me, I have my motorcycle license. I've never driven a motorcycle in my whole life, but I did spend about 5 years of my adult life driving Vespa. And they taught me when I got my motorcycle license that you go where you look. So you have to look far. And this is true if you've ever, I went snowmobiling for the first time, and it was the same thing. They're like, don't look at the tree, because if you look at the tree, you're going to go into the tree. And so that's exactly what happens with our money. If we start looking at our spending, we're going to get into our spending and we're going to naturally cut it out. It's so fun. So if you can keep that curious mindset and just ask yourself, what happened with my spending? And if a month is too daunting, just look at yesterday. open up your bank account and look at the transactions from yesterday. Where did you spend money yesterday? And once you start like being like, oh, that was kind of interesting. I wonder why that transaction came through. Maybe look at last week. And then you can extend it to like last month or last year. So starting with that, I think is really important. The next thing I'm going to ask you to do is a kind of scary accounting term. So I need everybody to take a deep breath. It's going to be okay, but it's really fun. Yep. If you can't see us, Chris just took a very deep breath with me. So I'm encouraging you, seriously, take a deep breath because this is hard. And I'm going to say, so of the money that you brought in from whatever software you're looking at, how much did it cost you to make that money? So I love this in-home service because when we go make money cleaning a house, usually we have to pay somebody to do that cleaning for us.
Yes.
Usually we have to pay like a credit card processing company to get paid from that job. Usually we had a little bit of cleaning materials that we had to spend to do that cleaning, right? We had supplies. If I'm talking to lead service owners, maybe we had a vacuum cleaner, like I love saying vacuum cleaner because people freak out, like they're always breaking. So, like you had some costs that you had to incur in order to make that revenue. And so that's the next number I like to look at in our bookkeeping, in our spending, is how much money does it cost me to make money? And if you're in a cleaning business, I'm going to guess, and you're not doing the cleaning yourself. So if you're in a cleaning business and you have cleaners out cleaning for you, I'm going to guess that for every $100 you make, it's going to cost you at least $50. And that is a huge life-changing moment when people start paying attention to the fact that like not every revenue dollar is something for us as the owner, right? We've got lots of expenses related to bringing in that revenue.
Oh, yeah. Oh, the expenses never
Chris
end.
is I split up, so I'm going to let him go. Yeah. You just tell us, yeah. Is that helpful? This idea of like, how much does it cost you to make money?
I think it's really great. And I'm debating mentioning this or not to make us take us slightly off track, but I think what you just said is actually very important. Basically what you're saying is, what is the true cost of each of the withdrawals and purchases in my bank account? Because there's the Stripe fee or the PayPal fee. There's all these other fees that might be attached to it, which we're not thinking about. And I'm going to take us a tiny bit off track here and then take us right back on. But I wanted your thought on marketing costs. So one of the things I talk students through with is setting a marketing budget can be very difficult because there's a lot of people saying, hey, you need SEO for $1,000 a month. You need AdWords, $1,500 a month plus the agency fee. You need to do Google local service ads and set your budget to $30 a day. There's a lot of information and costs with marketing that people are pushing on others. And paid marketing is great. We use it in my business. But my question for you is, when a business owner is considering investing in paid marketing, how would they determine their budget towards marketing? And what I'm thinking when I ask this is, there's the marketing budget, $500 a month or whatever. There's what they can afford, but there's also what they're getting in return for what they've spent. So I'm curious if you have any thoughts on a simple strategy for making a marketing budget. And if it's a non-simple answer, that's okay. I'm just curious how you might approach making a paid marketing budget for someone.
Yeah. So let's back up like 3 steps. Sure. When I teach, so I teach a budget workshop and I have like a 1-hour version and I have an 8-hour version, but I feel like budgeting is so important to a business. The first thing I start with is the personal budget.
Okay.
So like, how much money do you as a business owner need to make to feed your family? Like that's step 1. All right. Once we figured out how much do I need to make every month, then I go to step 2. And step 2 is, okay, so how much does the business need to make? If I'm going to make $100,000 this year, how much does my company need to bring in order for me to make $100,000 this year? Okay, so now that I've figured out how much the company needs to make, then I make it simple. I love simple numbers. Okay, in order for the company to make that much money, how many clients do I need? And the math there is simple. So let's say you're a cleaning business owner, and let's say that your sweet spot of how you service your client is doing biweekly cleans. Take your total annual number, how much revenue does the company need to make, and you divide it by 26. Okay, this is how much your biweekly revenue needs to be. And then you divide that by your average cleaning. So I know I'm talking to a wide audience all across the world, but I'm just going to use $150 as a simple number, right? But you should know what your average cleaning is. So you've got your total revenue divided by 26 cleans divided by your average cleaning of 150. That number is going to be how many clients you need. Now, how many clients do you currently have? And this is what always baffles people. So let's do a little bit of math because I think sometimes it's helpful. So let's say I want to make $100,000 this year, and the math says that means I have to have $1 million company. Everybody loves the $1 million company. All right, the $1 million company, and I do 26 cleanings a year, and they average, is 150 good, Chris, or should I do a different number for my average cleaning? What about your cleaning? What's your average?
$247. So we can do $250 if you want to make it simple.
So that means that Chris needs 153 regular clients. Now, I tend to be conservative and I like round numbers. So let's say I currently have 100 clients. All right. And we know we're going to lose some. So let's say like we need to build a plan to go get 60 clients, right? So 160 clients is what we're going to do to make the business be where we want it to be. So I need to go get 60 clients. So the first place I start for a marketing budget is how much do I have to spend to go find 60 clients? And my preferred answer is zero.
Yep.
Right? Like my preferred answer is go like do the guerrilla marketing, go send the postcards, go send the emails, go do the refer a friend specials. Like I hate this fallacy. I hate this idea that like it costs money to make money, or this idea that like you have to, spend $2,500 a month on SEO in order to like become relevant on Google. And I'm like, or you could just go rent. They ask you answer from the library and write some blog posts using ChatGPT. Like there are two ways you could go about that, right? But the marketing budget, I think, should be built around the business plan, which I think should be built around the owner's goals, and then make it super simple. So I need 60 new clients this year. How much is it going to cost me to go find 60 new clients? I will tell you that I started marketing in my window cleaning business last year for the first time after being in business 17 years. And it was a really painful experience because I found most marketers don't care who my clients are. They don't care what my revenue is. And all they're going to do is get me sometimes crappy leads. Their job is to get me crappy leads.
A lot of crappy leads.
And they don't even get me real leads. They get me clicks or conversions. Like those things don't always mean like an active lead where I have a name and a phone number and an email address for a real person living in my market that I can actually sell to. So I'm going to answer your question, Chris, kind of by opening a can of worms saying like, don't buy into it if you're listening to this. You don't have to spend a lot of money in marketing to make a lot of money. Let's just figure out first, how many clients do you need to go get this year? And let's get creative and lean about the easiest and fastest way to go find those clients.
No can of worms open at all. That was a very clear answer. I actually really liked how you worked it from a high level down to exactly what we're talking about. That was great. Actually, I think you're a very clear thinker.
Thanks. Well, it's like achieving your business goals is really just math. But most business owners make it so complicated. Like, it doesn't need to be complicated. Like, how many clients do we need this year to achieve our goal? Okay, how do we go find those clients?
The math.
And the harder part is, how do we keep them? Like, you want to actually keep the clients too, right? We don't want to lose them.
Oh, the retention is far more profitable, but a little harder. You can get the clients in on time, but can you impress them? Yes. Oh, that's another. Now that's a can of worms.
There you go.
It's funny. The word math has so much, I feel, almost like emotional charge with people. You say math and they're like, I'm out of there. I'm going away. It's almost like a bad relationship. People are running away as soon as you say it. That was a really good answer for a marketing budget. I know I got a little ahead of us there. So let's take it back to simple budgeting principles. So in your window cleaning company, I'm curious, since you've had it for 17 years, did you run the window cleaning company first, or were you a certified accountant first?
Well, we were window cleaners first. Yep.
Got it. Okay. So
My husband
I'm
spent summers cleaning windows, and he loved it. And he came
got it.
one day and said, I want to start a window cleaning business. And I was like, no, we're not business people. We're city people. We get pensions. Like I grew up in an entrepreneurial family where everybody failed. My poor dad and stepmom failed like 5 times. Business is hard, and being self-employed is hard. And the failure rate, if you're listening to this and you're still in business, I want you to know that you're in the minority. Like only 25% of businesses succeed, right? And most of the time, I believe that they fail because they run out of money. They fail because they're afraid of the math. And so I set out not to be an accountant on purpose. I just really loved money always. I just loved the story of money. I loved all the different ways that people make money. And so I started a career down as an accountant, and I had a cushy corporate CPA job. That was my job. And my husband had a window cleaning company, and he would go make money and I would spend the money, meaning I would pay the bills. And we would have this conflict where Jeff would be like, you're spending frivolously. And I'm like, well, I'm paying our taxes and I'm paying our tuitions and I'm paying our insurance bills. Like, I don't know why you think I'm being frivolous, but there was just always tension because he was making it and I was spending it. And we had this big disconnect. So a lot of my teachings came from me navigating how to get Jeff engaged with the spending, like getting Jeff to understand what we just described. Like, just because he had a $10,000 day doesn't mean we got to keep $10,000, right? Like, for him to have a $10,000 day, we had to spend like $5,000 just out in the field before it ever hit the bank account, really. And then we had to pay a lot of other things like the advertising and the vehicle cost and those broken vacuum cleaners and paying ourselves and paying our taxes. So understanding the very, very basic fundamentals of business accounting is how I realized, like, oh, nobody's doing this. Like, there's a huge opportunity in the market for there to be an accountant who understands home service and who can speak the language of the window cleaners of the world, the Jeffs of the world, right?
Ooh, that was good. Two things are running through my mind. There's a book, a very famous book called The 5 Love Languages. And you might be thinking, why am I mentioning this on a business podcast? I promise there's a reason.
Ways their love languages, you're doing it all wrong. You got to ask everybody in your world what your love language is. And fun fact, even animals have a love language.
I think that's true. And my dog was scratching at the door. I don't know if you could hear her earlier, but she's not enjoying the lack of attention I'm paying to her right now.
Yeah, hers is quality time, apparently.
It is. And many acts of service every day for her.
There are 5 love languages, and it's true I'd never found an example where it's not true. We all have one. Everyone.
It is. And I'm not sure if this will fit, but I'm curious. So what I'm thinking is, the reason I mention this, I'm in an international relationship, and for us, my wife is Japanese, I'm British American, and so for us, when we first started dating, there's the whole passion, everything. But when you get married, it changes to more of a steady relationship, and you have to really understand each other on a much deeper level. So for us, we found that book helpful, The 5 Love Languages, but it made me think in terms of business and money just now. I think for many business owners, accounting and math maybe isn't part of the love language with which they want to grow their business and do their business. So I'm wondering if there's some opportunity for us to make that part of the way that they view their businesses and connect with their businesses. Because when you were talking between you and Jeff was making the money and you were spending the money. There was the difference there, right? There was the disconnect between what was happening with the money. There was not an overlap between that. So I'm just thinking of like something with the 5 love languages and accounting. That was the first thing. I don't know where that's going, but I was just thinking there's something there.
I do have a thought about that. A lot of people have guilt and shame around money. There's something weird in our mindsets that say we don't deserve to make a good living. Like, if you think about how most businesses are priced, they're priced based on the market, right? And the market says I can only charge $45 per hour for a cleaner, right? The market says I can only charge, because that's what the market will bear. And I think that's just complete baloney. I run lifestyle businesses, all 7 of them, and I could care less what the market is doing. I am going to charge based on me, the owner, and my lifestyle. And I say that I stopped making money for myself many, many years ago. Now I make money for others. So the way I've overcome that mindset shift of like, oh, profitability is like for these corporate greedy monsters, right? Like, no. Profitability is my obligation to provide a living wage to my technicians. Profitability is my obligation to be able to give generously to my community. Profitability is my obligation to give back to the world. I happen to be really good at making money. And so I have an obligation, I think, to be a good steward of that money. And so when I think about the love languages, I think about like people are afraid. They're afraid of like being greedy. And if we could just shift that mindset to be like, it's not greedy, it's being responsible. Like my responsibility is to make sure my businesses don't go out of business because I employ dozens of people and I provide for their livelihoods. My responsibility is to make sure I'm priced accordingly so that I will be here 10 years from now. Because statistically, I shouldn't be. Statistically, I will have failed. And I fail when I price based on my neighbor who is silently going bankrupt, or when I price based on my neighbor who is not priced profitably.
Thank you. You saved me there. I knew there was something, but I was scratching. When you became a CPA, if we were to use your window cleaning business as a case study, how did the approach to how you guys handled money in the business change? Because I'm just thinking, if someone's going to take, whether it's a financing course or they're going to bring someone else to help them in, or they're going to implement Profit First, which we're going to talk about shortly, the way that they run their business is going to change. The way that they do their marketing might be different. The way that they account for their money will, of course, be different. The way that they pay themselves might be different. So I'm wondering if you could go back in time a little bit. Do you notice any major changes when you started taking the accounting and finance seriously that changed the way that you did your business, or was it more of a gradual step-by-step change?
I would actually say it's nothing to do with my practical training. So I'm a CPA licensed in the state of California, and I use less than 3% of that credential on a daily basis, even though I run 7 companies. And I'm going to break some stigmas on this call and say, you think that your CPA cares about your money, and they don't. If you think about the way that we pay our CPAs, we pay them to keep us out of trouble. We pay them to keep us out of jail. But the thing we're craving from them is to use this like great knowledge they have, all this accounting experience, and to help us like run a more profitable business. But that's not what we're paying them for. We're paying for them to like file a tax return. We're paying for them to do bookkeeping so they can file a tax return. Taxes are compliance-based. Taxes are not cash flow planning or forecasting or budgeting. Like taxes have nothing to do with the day-to-day management of our books. So in the CPA community, a lot of people say I'm a quack because I hate what's called generally accepted accounting principles. And the reason I hate them is because they have nothing to do with the day-to-day of a company. What you need to know as a business owner, you listener, is how much money are you making? How much money are you spending? And where are you spending it? You do not need to take an accounting class. In fact, I highly recommend you don't. It will only confuse you. And you don't need to know anything about finances. All you need to know is that I am making more than I'm spending, and there's some left at the end of the day. And you, if you can put on that what happened mindset that Chris mentioned earlier, you actually have way more skills to answer those questions than your CPA does. Because they don't care about your company. They just care that you don't go to jail and you pay your taxes on time. The worst part is your CPA doesn't even care if you have the money to pay your taxes. And that's when I got out of the tax world, is because I was helping. I'm using quotation marks if you're listening to this and can't see it. I was helping business owners file their taxes, but the reality was they had no cash to pay them. So it wasn't helping them at all.
That's a big one. Oh, that's a big one.
Yeah. So I believe that like if you can just get real curious about how much you're making, how much you're spending, where are you spending it, and how do you keep a little bit more of it, you're going to be way better off than most people know. Now, I hope that you didn't hear, dear listener, I hope that you didn't hear you don't need a CPA. Your CPA is super important. Remember the part keeping you out of jail? Like we really need them in our corner, and they're really, really smart at numbers. So if you could take them direct questions about like, can you help me figure out what my gross profit is? Or can you help me figure out what my target like marketing spend should be? Then they can help you. They can be a tool in your toolkit, but you you, with all of your experience cleaning windows or painting houses or cleaning houses, you probably have way more answers about how you can keep more of your hard-earned money than your CPA does. So I don't think that was the direction you wanted me to take it, Chris, but I had to do it because I feel like my trade, my profession often does a disservice to our home service business owners.
You actually took it a good direction, because what I'm hearing is that you should include your CPA in the discussion and make sure that that paperwork is done, but you should be taking back control of the part that matters to you, which is making more money at the end of the day. You shouldn't be reliant on them to do that part of it. They should file the paperwork, but you need to make the money and you need to do the planning.
Making money is super easy. Keeping money is hard, because you can go spend $5,000 on Google ads and get some leads, but can you sell them right? Can you sell them profitably? Like, that's the hard part.
Right. Ooh. So I think this is a good place to bring in Profit First. So many of the students here will have already gone through the bookkeeping module, and Profit First, if you haven't gone through it yet, is a fantastic, simple system that business owners can use to get control of their finances. And I can never pronounce his last name, but it's by, if you search Profit First and then Mike, it will come up.
Michalowicz.
Yeah. I think it's Polish, maybe. Yeah. But yeah, it's a tough one. It's a great book I read maybe 5 years ago now, maybe 6, for the first time, when it was making the rounds, when it was first published. And this book lays out a very simple methodology for how you can actually pay yourself first, which is what we talked about earlier. You need to know how much you need to earn first before you even get on to smaller budgets like marketing budgets. But it lets you know how much you should be paying yourself, what's realistic, and how to gradually pay yourself more over time. So Meg, I'm wondering if you can maybe take us through the Profit First methodology at a high level and a simple way that they could start to implement that into their businesses.
Yeah. So remember how we started at the beginning and Chris was asking us, like, what's the first step to getting a handle on our finances? And I said, well, separating the personal from business spending, right? So having a separate bank account for only business transactions. The reason we say that is because if we think about our businesses, that's usually where we manage them from. Most business owners are compulsive about how much cash is in their checking account. If they know nothing else about their business, they know exactly how much money is in the bank. We tried to challenge you and we said, okay, we also want you to know how much revenue did you bring in? And we want to be curious about that money and ask what happened to it? Where did it go? Right? So if we have those frameworks of like, that's like, I think that's human nature. I think that's like just like our default state of knowing money. Profit First plays into that default state. So Profit First says, okay, so if we're going to manage our businesses based on our bank accounts, why don't we just use that to our advantage? So Profit First is a cash flow management system, which means that it encourages you to save because it restricts the amount of cash you have available to spend. So the basic feature of Profit First is we separate our revenue from our expenses. So if you don't read the book and you don't want to do anything else, here's what you do. You open 3 bank accounts. Bank account number 1, all of your deposits go into that bank account. So checks, credit cards, however you get paid from your customers, all deposits go into that bank account, and it's called your income checking account. Second bank account, profit bank account or savings bank account. Every deposit that goes in that income bank account, you transfer over a percentage to that profit bank account. So let's say you deposited $1,000 today and you transfer over, let's say 10% into that profit checking account. So you're going to move $1,000, you're going to move 100 of it to the profit checking account. Then you move the rest of it, the remaining $900 to the third bank account. And the third bank account is called your spending bank account. And so what Profit First has done is now the only bank account you pay attention to, the only bank account you can actually spend money from is the spending bank account. That's the only bank account with a debit card. That's the only bank account with a checkbook. And you set up a rule for yourself. In order for money to go into a spending bank account, I have to first transfer it into the profit bank account. So now, if you watch what's happening, before we were spending all $1,000, right? The $1,000 was in that account and it came in and it went out. And, at the end of the day, all $1,000 probably gets spent. Now we're saying, you never see the first 100. You never get to touch it. It's out of sight, out of mind. You're not even pay attention to it. And I love this about Profit First because if you think about it, That's what most business owners do. If it's in our account, remember me when Jeff was accusing me of spending all the money on taxes and insurance and payroll? Like, imagine how I would make different decisions if it wasn't in there. I might tell a collector, hey, I don't have the cash right now. I might tell the insurance company, hey, can I finance that? I might tell an employee, you know what? I actually don't have enough work for you now. I'm going to have to put you on a temporary layoff. We don't tend to do that because the money's in the bank account and we spend it down. And we're spending it on what we feel like is important things, but this just plays that mindset. Now, the true profit first system actually involves 7 bank accounts across 2 different banks, and it's slightly more complex than that, but the same principle stands true. We separate our spending from our earning, and what naturally happens is we start to feel how hard we worked for that money, and we don't want to spend it. So we start slowly but surely hiding money from ourselves. And I'll tell you, like Chris, we found Profit First 8 years ago. And we went from rarely having any savings or rarely having any money in our business checking account to having stacks of cash and going to 6-figure distributions every quarter when we switched to Profit First. And not that much change in the business. It was just this relationship with like, I spend what's available to me.
That's really good. I like the simplified version that you provided. One that I think would be worth talking about too. Well, there's 2 things. They tie into each other. I hope I'm not asking a very big question of you here, but I know that I might be.
Good.
One of the things I advocate for all students, and Mike does as well, is an emergency fund for your business. Many people, when we talk about personal finance, we talk about have a 3-month emergency fund, have a 6-month emergency fund for your personal expenses. But one of the things I really advocate for people is having a business emergency fund too. Because if you're always operating only on the income coming in that month, if you have a bad month or a bad season, which is quite common in the home services industry, we all have bad seasons, you can very quickly go down to negative. And so I'm curious, do you have a guideline that you typically advise business owners on emergency funds for businesses?
It changes depending on the market. So I think I want you to start with thinking about how much cash do you currently have saved. So if you're listening to this, and I want you to do this with the curious mindset, this is a judgment-free comment, but are you spending today the money you earned yesterday? And I'd say 90% of business owners that I talk to are. So if we say that, then what that means is our current cash reserve is less than 1 day cash. So step 1 is going from 1 day worth of cash to 5 days. So let's think about last week. How much money did I need to operate my business? And let's try to get 1 week savings set aside. And Profit First is really good for this because what I do is, we said we had our income, our profit, and our expense account. I just accumulate all that income for 1 week. And then I make my distributions. And what happens then is I'm spending last week's revenue this week. So now I've got at least 1 week reserve. Once you've got 1 week reserve, you can go from 5 days of cash to 6 days, right? And you slowly just start extending the amount of time between when you make the money and when you can spend it. And that's the beginning of an emergency reserve. Once you've got 2 weeks of cash saved, you will be breathing easier. It is just default state, like basic bare principles, is trying to have 2 weeks worth of spending in a checking account that you're not using on a daily basis.
Got it.
And then
that makes sense.
Yeah. And I think, so then we can go pie in the sky. We can talk about sophisticated businesses.
Sure.
But I want you all, because I talk to between 10 and 20,000 business owners a year. So as a listener, I want you to know you're in very good company if you were spending yesterday's income today. Like that is just kind of the nature of, and I'm going to say Americans here. I'm going to classify this. The nature of Americans is we tend to overconsume and we tend to grow businesses aggressively. So everybody's telling us like, we've got to chase that $1 million company. So we're spending more to get to $1 million. And that means we have less cash. Once you can breathe just a little bit, and that's what I call it. I'm from California. I didn't say that, but I'm a hippie from California. So once we can breathe, like actually take a deep breath because we're not stressed about this week's payroll, then you can start extending the amount of cash reserve you have saved. We're still in a bit of a inflationary time. So I'm recommending between 1 and 3 months operating expenses. I'm not recommending more than 3 months operating expenses. But when we're in a different time, I will usually recommend between 3 and 6 months. And these come in handy for things like COVID, or we have a giant storm coming in this weekend. So we have no work on the calendar because we can't work. It's just a really dangerous time to be out. And so that used to be really stressful. But now when you have cash reserve, you're like, okay, well, that sucks, but we'll make it up. We've got it saved. It's going to be fine.
I like the way you broke it down too. 5 days is a very good starting point. One day, of course, as step one, but 5 days is a good first big goal, I think, because it's very achievable. It's not a month, it's a week of reserve funds. That's very doable.
And then 2 weeks is ideal just because of the payroll cycle. In cleaning, if you do any commercial cleaning, like sometimes what can hurt us is like a commercial client won't pay because they're maybe on a net 30 or 60 or 90. And that we still had to pay all of our technicians. We still had to buy all those materials. So we're trying to build up cash so we can float our own money, right? So we can run a debt-free company.
I try to have a system for most things so that I'm free to not think about it and do it. So in my business, I use profit first. In my personal life, I use kind of a modified version of Ramit Sethi's I Will Teach You to Be Rich personal finance system in terms of automating the incoming money. Once I get my salary, that's automatically transferred in certain percentages to other accounts, like savings accounts, like a tax account, and so on. I'm wondering, for a business owner who's starting to get their business budget and their business finances under control, at the end of the day, the thing that really matters to them is what they're paying themselves and what they're able to support their family with. So how do you navigate that tricky transition from business finances to personal finances? Because there's a bit of a gap there. And I know there are things like pass-through entities, which make that a little bit more complicated. But do you advocate any specific systems or way of doing personal finances once you've actually paid yourself? So the business finances are good. You've received a paycheck or a distribution. What do you do with that money now on a personal level? Do you have any framework you might want to talk through students with?
I usually say it's all backwards of what you just described. I think, Chris, you're slightly more sophisticated than most business owners I talk to. So your students may also be as sophisticated. I'm going to share this in case you aren't. We usually work backwards. So I find a lot of business owners treat their businesses like a piggy bank. So they don't have a very good handle on their personal spending. And so I'm going to say that is the first step, is you should treat yourself like you're an employee, and you should set a salary for yourself once a year. And that salary should not change even if the business does badly or if it does well. Like, I think we often attach too much, like the success of a business with our personal spending. And then we get spending creep at home. And then that creates extra pressure at work. And it's this vicious, like, chasing our tail cycle. So, like, let's say that the business owner salary that we determined in that first example, we had $1 million company, we're going to pay ourselves $100,000. I would probably set my salary at $80,000. And I would set it on a recurring frequency. So if that's weekly, fine. If that's every other week, fine. If that's monthly, fine. But I'm going to pay myself exactly the same amount every pay period, regardless of how my entity is structured. So we're going to get slightly nerdy for just a second. If you're a sole proprietor, that's called a draw. If you're an S corp, that's called a salary, wages. If you're an LLC, it could be both. So I don't care the tax treatment about that. That's why we have our CPAs to help us tell us like what's the right tax treatment for how I pay myself. But what I care about is I've set a salary and I've gone home and I've had a conversation with my family and I've said, this is how much we're going to make this year. And I've budgeted for it. And it is now completely independent of the success of the company. And most business owners, like when you have that good month, you reward yourself with that trip to Disney World, or you reward yourself with that like new pool, or you reward yourself with that new car. And I'm saying, stop that. You can do that like once a quarter or once a year, but your personal lifestyle should not change on a monthly basis. Your personal lifestyle needs to stay set. Like you need to be covering your basic spending with the company, and then everything else should probably stay in the company. Because I think a lot of businesses either fail or don't grow because we've robbed them of the cash. And the cash is like the lifeblood of the business. So I think that was a different answer that you were expecting me to talk about, like maybe investment strategy or like cash management strategy. And I'm going to say step one, personal budgeting with your family. Step one, like how much do you need to bring home, and only bring home that much. And I'm not saying to live extravagantly. I'm saying to live comfortably. Like how much, what is your dining budget? Like most business owners, they don't have one. Okay. What is your housing? Like how much are you going to spend on your kids or your pets? Like on your self-care. Like my self-care budget is pretty expensive. I reward myself with a personal trainer to get me to the gym. I reward myself with regular massages and facials because I feel like I work hard. My companies aren't paying for that. Those are personal expenses.
Yeah.
And I budget for them at the beginning of the year, right? So I think, just getting a handle on how much money you need is step one. And then really just having some discipline around the cash is really important.
I'm enjoying this conversation a lot because we're taking such different perspectives. That's precisely why I wanted to bring you and other guests on. I'm one guy with one perspective.
Who's good at money, who's really good at money. And like, I love that. And I think that we all want to be good at money. But if you're listening to this and you're like, I'm like barely making ends meet. And I'm like, you are in good company. Like that is a normal thing for business. And you're in the right room. Like by learning from Chris and by having conversations like this, we can start making steps forward to make easy changes, like painless changes, and having more like opportunity, I think, more financial freedom. That's what we're working towards here.
So if I were to make of what we've talked about so far, a small summary.
Yeah.
Would something like this get your stamp of approval, or you can tell me what you would change in this? So if we're trying to get control of our finances, the first thing we want to do is look at that top line number very simply. We want to have a clear number of our revenue, what we're bringing in. If that's the one number we start with, that's probably the best number we'd want to do it with. Once we know that number, a good first step to take is to find out what's happening to that number. What are the expenses that are being deducted from that top line revenue number? So if we're earning $10,000 a month, to make it easy, and we use a calculator and we calculate all the expenses in our business account that month that were subtracted from that number. Maybe we find out that there's only $1,000 left in the account. Something happened to that $9,000. So that's our expenses. We want to look and see individually what the cost of each of those expenses were to get a good idea of that money. That's the finding out what happened to the money phase. That's just a good first step to do to start to get in control. Then a second step might be implementing a simple pay yourself first cash flow management system like Profit First, where we actually set up a couple of different accounts and then we automate to a certain degree where the money where our revenue is going into each bucket. You might have an operating expenses bucket. You might have a profit bucket. You might have an emergency fund bucket. You can set up different buckets, but the intention with those buckets is that we automate where that revenue is going so that at the end of the day or the end of the week or the end of the month, we know precisely how much we're allowed to spend and still make a profit in our businesses and still pay ourselves fairly. That would be a second next step would be to actually start to automate some of that cash flow so that you're not having to worry about where every dollar is going. It's actually already being assigned to somewhere else so that you know that it's going somewhere productive. And then maybe a third next step might be to find what your personal expenses are, to find what salary you need personally, and then to work backwards to find out what your budget should be for your business for things like marketing expenses and for things like how many clients you need to hit that goal. Is that a fair summary so far?
I think it's close. I'm gonna shift it just slightly. And so revenue we've got, perfect. And then I really want you to know how much money do you have to spend to make that revenue as a percentage. So if you're not sure and you're in the clean industry, just use 50%. So like we had 100% revenue, 50% went to our technicians or to our supplies and materials. And then to make it super simple, choose your profit number next. So let's say you want 10% net profit. Okay, so now I only have 40% left to spend. So everything Chris just said about the buckets is true, but I think getting those big ones off the top first is the best. Because now I have 40% left to spend. How much do I need to go to me as the owner? How much do I need to go to marketing because people are lying to me, telling me I need to spend money on marketing? Okay, and then how much is left for operating expenses? And usually the first time we do that exercise, the operating expense number ends up being negative. And so you get to rework the numbers. And it's just a super simple, fun math exercise where you're like, okay, well, maybe I'm paying myself too much. Or maybe I need to go make more revenue. Or maybe I can't afford the marketing that I thought I could. Maybe I need to tweak that marketing number. But those are the basic levers in your business. Revenue, cost of goods sold, like how much does it cost to make this revenue? Target net profit. Because remember I said we have a responsibility as an owner to run a profitable company so we can be here next year, so we can have that that emergency reserve that Chris is talking about. Okay, then how much do we want to pay ourselves? Because we could just go get a job, right? We all chose at some point we didn't want to work for somebody else. So let's make sure we're paying ourselves, right? And then you can work backwards into that marketing and expense number. So it kind of flips the formula on its head. And if that was like making too much way over my head, if you're really struggling, revisit that profit first training, because that is the profit first model. We just changed the accounting formula so that we literally planned for net profitability first.
And a final question on the budgeting, and then I have just a personal interest question for you. Is there anything we're missing that you think is essential to add to that basic process that we just outlined for getting our finances under control and maybe going from chaos to calm? Is there anything you might want to say, hey, this is an important consideration if you're doing this right now along with us?
You deserve to make good money. Like if you're telling yourself a story like that, I'll pay myself after I'm done growing it. I hear that so often for startup mode, right? Like, I'm running it really lean in the beginning, or I'm sacrificing personally. I'm going to just flip the switch for a minute and say, like, you are working really hard. You are taking on a lot of risk, and you deserve to pay yourself comfortably. Now, that being said, you also need to be responsible about it. So set the personal budget, set the salary, and stick to it. Have some discipline and just stick to it. And if you can separate your personal lifestyle and spending from the business, you will be so much less stressed and you'll be so much happier. But I find business owners go through burnout, emotional burnout, and physical burnout when they're not paying themselves and when they haven't separated this burden of the business performing to feed an unhealthy personal lifestyle. So pay yourself well, pay yourself generally. Don't wait to the end. Don't avoid it. Don't not do it. Don't defer it. Pay yourself, but also then have some discipline. When you decide you're going to pay yourself, stick to that budget. Don't dip into the piggy bank when times are good.
Very good. Your business needs to serve you rather than the other way around. And I think that's a core part of your message, at least from where I'm standing. I wanted to ask you about your personal life and the travel that you do. So a big part of what I do in my businesses is I started them so that I could travel, so that I could move over here to be with my wife. I needed that geographic freedom from my business. And it's an unusual thing, more common now, but still unusual for a local physical-based service business like cleaning or painting or lawn care to have an owner that's in a different place than the service area. It's almost always they're in the same service area. But you're someone who has also done this with all of the businesses that you've started. I think you said you own 7 and you've just started an 8th with your husband. So I'm curious for you, you spend a lot of time traveling to France and you spend a lot of time with the life part of the work-life balance, although I know you also spend a lot of time with the work part. And so I'm curious for you, when you're running all these businesses, how do you find the time to balance your personal life, to balance the travel? How does that work for you in your life where you're juggling these really big different areas, the travel, the family, the relationships, the business? Because it's quite a high intensity lifestyle. And I'm just curious if you could speak a little bit to personally how you do that.
I think it starts with a why. So anybody listening to this is going to have a different why than I do. So we started the window cleaning company because my husband wanted to do window cleaning and there wasn't anybody local that he was willing to work for. So he started that window cleaning company because he wanted to work for himself and he wanted to be a window cleaner. He didn't have any interest in growing it in true business. He really enjoyed the act of cleaning windows. He really prides himself on being a window cleaner. And he didn't need to be a business owner. He wanted to be an owner operator. But he married me and I love to travel. I'm gone 30 weeks a year. I just have this crazy itch to see the world before I'm too old to enjoy it. And so I said, I need you to be able to make money when we're gone. Most business owners that are tied to their local demographic, they're driving revenue either by fulfilling the work or selling the work or like ensuring that the team's fulfilling the work, like they get really tied into their business. And so for us, that first why was like, no, I want the business to serve our lifestyle. So that means that we can't only make money when Jeff's cleaning windows. So we separated that. When I started Likes Accounting Company, I started because I was working as a tax accountant and I had really good time off and I made really good money. So I didn't care about being in charge or being the owner, but I wanted to go to France for 6 consecutive weeks. And my employer told me, if I don't need you for 6 weeks, I don't need you. And so I said, well, then I guess we've now hit the cap of me being an employee and I've got to go be self-employed. And so Likes Accounting was always built to serve this lifestyle of being able to travel wherever and whenever I wanted. Now, the double-edged sword of that I think Chris is kind of alluding to is like, now I have a company where I can work from anywhere. So how do I not work from everywhere, right? Like, how do I actually close down the laptop at the end of the day and enjoy the time in France? I remember recently, not that long ago, I went to Brazil for 36 hours and I ended up on 6 hours of Zoom while I was in country. And I thought at the end of it, like, what was the point? Like, I should have just stayed home then. Like, if you're going to work from everywhere that you go, like, just because you can doesn't mean that's technically enjoyable. So for those listening, you might think that sounds exhausting. Like, you like to be home, maybe you have kids, maybe you really enjoy like being in your community. So I want you to think about, why did you start your company? And then I want you to go back to that and really make sure that you're fulfilling that why. So if it was to make more money, are you actually making more money? If it was to work less, are you actually working less? If it was to spend more time with your family, like, are you spending more time with your family? And if we're really honest with ourselves about why we started our companies, that's how we refine the balance. Because business is hard and we all had rosy colored glasses when we went out on our own. So for me, that's how I maintain the balance, is I remember, why did I start? What was the goal? And I'm constantly reevaluating if I'm actually achieving the goal of starting. And so
That was great.
yeah, and I want to give people permission, because maybe they're not like us, Chris. Maybe they don't like. There's so many people in my life who are like, man, that's terrible. That sounds exhausting. I don't want that. And I'm like, okay, but what do you want? You want something, right? You started this for a reason. What do you want? And just, I say, screw what everybody else says. Like, build it for you, build it for your family, and do it for your happiness. That's the true work-life balance, I think.
That's exactly what we try and teach. Is we want to give you the freedom to travel the world with your business if you want, but you don't have to. But you should have the freedom to, if you want to pick up one day and change where you are.
Well, and maybe,
it's funny.
Maybe the freedom is to like coach your kids' t-ball team, or maybe the freedom is like to take your kids to school every day and pick them up at the end of the day. Maybe the freedom is to like be able to buy a wakeboard boat. I helped somebody with a goal recently who just really wanted this big wakeboard boat. Like, whatever your goal is, like, let's build the business to serve that thing. And I think that's the sexy part about business, is we print our own money.
Not to get too philosophical at the end, but I think one of the, I'm curious if you'd encountered this too before we wrap up. One of the things I noticed when I actually did start traveling with my business was I was trying to escape my situation being trapped with my business before. But when I'd achieved that, I realized I didn't have a bigger, meaningful goal. I didn't have anything I was going towards. I was escaping my like geographic entrapment, so to speak. But then I was traveling and having fun and all this stuff. But it started to feel like, what am I working towards now? I've achieved this big goal. What is beyond this now? I'm curious. And if you don't, that's fine. This is really just curious. When you started traveling and when you started more businesses remotely, I'm wondering, was there a bigger thing that you're going towards, or did you feel a big shift in your goals when you actually started out on your own? Was there kind of a big perception shift, I think is what I'm asking?
Yeah, it's interesting because my husband and I have been married now for 14 years. And so we have had very different relationships with that question. So like for him, when the business didn't need him anymore, he had this huge loss of identity. And the same business, when it didn't need me anymore, I had this huge sense of pride. And so I feel like it can be either or, right? But this question of like, as I've removed myself from the day-to-day, as I've made myself completely irrelevant in all of my companies, I have needed to find like more purpose or new purpose, like a new identity around that. And I think some people, like my husband Jeff, That's been a very uncomfortable thing. Like, he identified as a window cleaner and the proud owner of Jeff Likes Clean Windows. Like, that was his whole identity. And if you're listening to this, maybe that's what you're thinking. You're like, no, but that is who I am. And I'm on the other way. I'm like, interesting. Who is Meaghan outside of Likes Accounting? What does she like? What does she do? How does she spend her time? And I've really enjoyed that process of like trying new things and experimenting with things. And it's not been perfect, but for me, a lot of our travel now, last year we were able to do 4 philanthropic like mission trips to developing countries. I think we traveled abroad 10 times last year. And those mission trips have been really rewarding because I'm able to give of my time, I'm able to give of my skills, and I'm able to give of my money to somebody that would never, I would have never been able to help if I didn't have these businesses supporting that lifestyle. So like that, when I say I stopped making money for me, like finding that bigger purpose of like making the money, having the freedom, helping others, and seeing the world, like that alignment has made my heart really happy. Now, we'll see. And maybe I'll burn out, maybe 30 weeks a year. I think we're going on year 5 of that pace. Like I told Chris, I was like, I'm going to try and stay home more this year, but I just got back from being gone 7 out of 8 weeks. So he joked, maybe it's 29 weeks this year. I don't know. But really just questioning like the why. What makes your heart sing? And a lot of people like, Jeff, that's a very uncomfortable question. Like, why are you asking me that? That's a lot of feelings. And I'm like, well, because I think it's important. Like, what are you doing? What do you want to do?
That was wonderful. How can we earn more for ourselves so that we can then give more to others in return? I really like the message that you're sharing there. Ooh, that is a great place to wrap it up, I think. Meaghan, I think the final thing I'd want to say, and then I'd open it up for you if there's anything you'd want to add. The best place to reach you is likesaccounting.com or makelikesmoney.com. Are those the 2 preferred methods that you find people to reach out to you on?
Yeah, that's where I spend most of my time is still with Likes Accounting. And then I have a personal brand now that we've built called Meaghan Likes Money. And my mission is to inspire people to, make more, save more, and give more generously. Like that's what I'm out here doing now. And I'd love to help you if any of this resonated with you, or if you're struggling. Like, we have tools, we have a budget tool, a free budget tool that I'd be happy to share with you. I'll send that to Chris, and he can maybe include that in the show notes. But that's a downloadable tool where you can kind of plug in these numbers as we talked about them. If you're like, my books are a mess, I have a great team of people that would love to help you get those books sorted out. If you're like, I can't quite like do that curious mindset about my money, like the what happened question, we have a team of trainers that can help you figure that out too. So I'm here to help you. I'm here to not only inspire you, but to like, kind of roll up my sleeves next to you. I'm on a mission to help prevent more business failures. Like my dad worked hard. That wasn't the problem. The money was the problem. So let me help you with the money is what I like to say. I think also just inspiring people that choose your own path. I love that, Chris, you and I seem to be on a very similar path and mission, and it's really fun. And I love that you're helping other people find their path and their missions. So we're here cheering you on, and we're with you. I think sometimes entrepreneurship can be really lonely, especially once we become leaders. So I think I'll just end with that note that you are not alone, that Chris and I are here for you, and we're supporting you. And we believe in you. Like, if this has been triggering for you because money's hard, like, you're in good company, and there's a way out. You're going to be okay. There's a way out.
That's a great place to end it. I think if any of you are feeling a little overwhelmed, if you reach out to either of us, I think I can safely say that we promise we'll help you get back on track. So don't leave it a day longer. The money is too important for you to just sit on it for another month. Reach out to us, even if it's a 1-sentence email, and we will help you. Meaghan, thank you so much for joining us on the show tonight.
Thank you.